All right, we got more clues about the state of the consumer today. Retail sales coming in flat last month with falling gas prices and a drop in auto sales. Meanwhile, earnings at Target taking a huge hit because of unwanted inventory. Lowe's reporting mixed results too. Jenny, I want to come to you. I got to give a hat tip to Josh Brown. Earlier this week, he pointed out we have two different consumers based on income levels and things like that. But one thing I want to point out is that retail sales was flat overall. But if you take out autos, and obviously we have a lot of issues with just auto inventory, retail sales were up actually 0.4%, almost 0.5%. What do you make of what we're hearing from the retailers and also these numbers?
So when I was on maybe a month ago with you, we were talking about my bullishness on the consumer. And one of the things that I said was, I'm not necessarily bullish on the consumer, but I'm bullish on the consumer relative to where the consumer discretionary share prices are suggesting the consumer is, which was decimated. And so that's actually played out well, because what we've seen is the consumer has held up better than what the market was anticipating they would be at. The consumer would be at a month and change ago. I think it's interesting, and this is a hard thing to talk about because it's very nuanced, but if you look at the five buckets of wages, right? The highest wage earners, the top 20% of wage earners, they make up almost 50% of consumer spending, and so on and so forth. The lowest 20% of wage earners only makes up about 5% of consumer spending. So that's where we all know that people are hurting. Our hearts hurt for the people who are hurting, and that's very hard. But when you put on your cold-hearted capitalist cap and look at it from an economic perspective, you see that even though there's people out there who are hurting, those who spend the most are kind of fine. So I'm unsurprised by how well the consumer is holding up broadly.
Jenny, I'm going to test your theory a little bit because you're talking about those high-end consumers. Tomorrow we have Ross reporting. That's definitely not a high-end consumer company. What are you expecting from that, and what's that going to say about those other consumers that you're talking about? Well, now that you have your cold-hearted capitalist hat on.
I'm not talking about only the high-end, right? The high-end, that top 20% of earners who makes up 50% of spending. I'm talking about 60%. So let's take the three groups, right? The three highest groups. That's a huge amount. That's about 85% of total spending. So that's most people out there. And so I think Ross is going to be fine. I think the people who, and I don't know how to say this without sounding really crass, right? But the people who are in that bottom 20% and even the bottom 40%, they're probably not even shopping at Ross. They're probably not shopping at TJ Maxx. They're probably not shopping that much at Home Depot. So it's hard and it's sad that people are affected so unequally at this point in time. But that's the way it's always been. And so I think that's why when people say don't bet against the U.S. consumer, they know that the vast majority of the U.S. consumers are still in okay shape and that they love to spend. And even if they're spending and chipping away at their savings and adding up their credit card debt, which I'm not saying any of that's great, it's not. It just means that money is being transferred into the pockets of the consumer discretionary companies.
You mentioned Home Depot. I'm going to go to two military men. I don't know if they're cold-hearted. I'm going to go to two different military men right here. Jim Lebenthal, I'm going to start with you, Navy man. Since we're getting cold-hearted and hard out here with Jenny, Home Depot reported, you saw the report. What did that tell you about the quote-unquote state of the consumer?
Well, the report from Home Depot was pretty good. Okay, I mean, there's a rub against it that the number of transactions was down, but the average ticket price was up. And you put the two together, and it was a better than expected report. Plus, most importantly, they maintained their guidance for the rest of the year when the comps are very hard. So what Home Depot is seeing is that the consumer is hanging in there. And frankly, that's consistent with what Walmart said yesterday, and Target as well. Brian Cornell today said, hey, the consumer's hanging in there.
And Amazon a few weeks ago.
What's that?
And Amazon a few weeks ago.
Yeah, and I think this is the main point. We know the consumer has been through one heck of a storm the last few months. I mean, that was ugly in June, okay? But here's what we also know. Gasoline futures are down 1/3 from that June peak. They're back to where they were in February, just at the start of the Ukrainian invasion. That has not fully shown up at the pump yet. Corn and wheat are back to the levels, these are the futures prices, are back to the levels they were at the beginning of the year and well off of those June highs. Airplane tickets are down. Used car prices are down. Yes, not all is well in Tahiti or Denmark or whatever the expression is. We got some rent problems. We got a few other things in there. But the basic trend in inflation is coming down. That's visible from all these prices I'm talking about. And that will give the consumer leeway to spend. So when Brian Cornell says that the consumer's hanging in there, which, by the way, Jamie Dimon is saying that. Mr. Moynihan at Bank of America. There is factual reason upon which that is based.
All right, we're going to have to leave retail here. Degas, I know you own Home Depot as well. You're saying people need to look at it.